Hello and welcome everybody to the Hot Corner live strategy session. We do this every Wednesday at 1 o'clock. I'm your host, Steve Straz. I'm the director of research here at All Star Charts. Got some fun stuff to talk about today as participation continues to broaden out in the equities market. We have more and more opportunities. Just begging for us to get long. Got to be a little bit selective in these times. So we're going to talk about the dynamic that we're seeing, how that participation is kind of spreading into more and more groups. But first, as always, nothing we discuss here today constitutes any solicitation to buy or sell any securities. This is solely for informational purposes, not to be construed as investment advice. For more on our disclaimer, allstarcharts.com/terms. I'm going to go right to the chat because I get behind on the chat and it's not easy. What's up, everybody? Thanks for being patient. Steve, would you add to Google at these levels? I was just taking a look as we were getting ready here for you, Joe. You could definitely add to Google right here. I don't have the chart today, but you see that little consolidation in Google that's really gone on since, I don't know, September, kind of emerging from it now, resolving higher from it. Problem for me is that there's more overhead supply that we're about to go run into. Even once this range resolves, we're running right into those highs from early 2022, late 2021, right around 150. So you got about 10 points of upside, maybe 7%, and then right into another kind of shelf of resistance. So I guess the answer is yes, but I would probably be doing other things. Good. Let's go, Chewy. Don't you worry, Ryan. We're going to get to Chewy soon. We're going to get to Mara too. Bitcoin miners, most asymmetric trade. Oh my God. I think basically what you mean by that is it's a really clean setup, right? You could see that risk reward perfectly. If you get in right around this 1920 level, well, we'll get there. I'm getting ahead of myself. Hi, Rachel. I don't know. GSOL. GSOL. I don't know. Hey, T-Man. Maybe your favorite, Rachel? Maybe. Anyway, I looked into the Coinbase thing. These guys are charging $30 a month for this Coinbase Pro. I feel a lot less bad now about all of the commissions that I paid. And what a business. Imagine going to Schwab or Vanguard and them charging you a subscription revenue fee. What a business. Good for Coinbase. Please help me be selective. We'll talk about that. We'll talk about that. how to pick when there's so many charts breaking out, right? When so many things look good, and trust me, the way it's looking, where things are headed, looks like we're only going to have this problem more and more in the future, right? As more groups, more subsectors continue to join the party. 1 month free. Wow, how about that? I'm not signing up for $30 a month. All right, so let's do this. Let's jump in. What is this? Small versus large. This is the Russell 2000 benchmarked against relative to the S&P 500. Right? Traditional small cap index, IWM, and our traditional large cap index. It's been a rough go for small caps, right? For a while now. Early 2021. Early 2021, when this ratio peaked, also right around the same time when most stocks were peaking, right? Market internals peaked almost a year before the major averages. So the bull market of 20 and early 21 was more or less coming to an end when that outperformance from small caps stopped. Straight line lower, just about, past few years. Now look at this, hooking higher, reclaiming a key level at these prior lows. And it certainly seems, when we look beneath the surface, this is one of the breadth dashboards that we do. We're playing around with different visuals from this data set. Ultimately, what we're doing is we're looking at all of the individual components, right? All the individual stocks in different groups and then ranking them by strength. So in other words, if you're number one here, so small cap consumer discretionary, number one, and the last column is just a composite ranking of the first three, which is short-term, mid-term, long-term, right? If you're number one, it means that you have the most components beneath the surface that look good, right? We're using different metrics, X amount of stocks or percentage of stocks above key moving averages, right? Percentage of stocks making new highs, all that jazz. What it does is it tells us where the strength is below the index level. For the first time during this new bull market cycle, JC doesn't think we should call it new anymore. I think he's right. So anyway, for the first time during the current bull cycle, most of the strength is now coming from the mid cap and the small cap sectors. We haven't seen this before, right? So you see it here, we highlighted it in red. Materials, industrials, consumer discretionary. This is the mid caps here in the middle. These are the small caps. A lot less green on this large cap screen over here than what we're used to. The other key takeaway, and here they are simply ranked out, right? So you see the S&P small cap 600 now ranked at the top of this list. We're just showing the top 10 from this table, okay? What you'll notice is, like we talked about last week, it's not growth or value. It's not like, oh, everything's leaving growth into value. No, maybe it's leaving the biggest, best performers, which happen to be mega cap growth stocks. Talk about the Magnificent Seven in just a second. Maybe some money's rotating away from them and just simply down the market cap scale to smaller growth stocks and value, right? So you see here, consumer discretionary, both the small caps and the mid caps are 1 and 2, then small cap industrials, small cap tech, right? Small cap financials. And look who's still on the list, large cap tech. We don't want to throw these stocks away. We just want to be prepared for a world where they're not dominating the way that they did in 2023. So this is really, really healthy stuff. Just a super constructive broadening out of the rally. And again, it's more market cap rotation or an expansion in overall participation than it is some sort of growth versus value thing. It's just more and more stocks are working. Finally, small and mid caps are joining the party. And it doesn't mean the Magnificent Seven can't and isn't likely to keep working higher. You'd think in an environment where participation is improving, right? And we're seeing, just steady breath improvements. Well, that's very bullish information. Of course, these stocks are going to keep working. We're talking about leadership. So Magnificent Seven, new all-time highs. This is just an equal weight index of those 7 stocks. I think it's actually 8, right? Oh no, we only include Google ones. Yeah. So again, it's more about the relative trend here for the Magnificent Seven. Will those stocks keep going up in a bull market? Yes. Are they maybe done outperforming? Looks like it, right? So this is Magnificent Seven versus equal weight tech. So the biggest, best tech stocks versus all the tech stocks. Rolling over, making new multi-month lows on a relative basis. Just had its worst week, right? This ratio, worst week since last year. All that means is that the performance gap between the Magnificent Seven and the rest of the tech space was at its widest in favor or not in favor of Magnificent Seven that we've seen in about a year. Meanwhile, small caps at the index level finally looking a lot like the charts we've been buying all year. Sweet reversal patterns. Mid caps already breaking out. Small caps pressing the new 52-week highs today. They look like they want it. If you got long small caps, though, at the lower bounds of this range and just traded it back up here, crazy not to take profits. I don't know. right? I don't know if we get rejected at this level one more time, right? Do a little backing and filling, then rip higher. Maybe we just blast higher right here today and tomorrow. We'll see. But never hurts to pay yourself. The mid caps and small caps look good. So more and more groups are working. We have more ponds that we want to be fishing in, not just in the US. I expect to see more and more international indexes and more international stocks jump onto our radar. Here's the iShares Canada ETF, EWC. Similar looking reversal, the ones we just talked about in mid caps and small caps. Right? I think we're entering a world where we start talking about international stocks more. Finally, that would be fun. What else? How about the banks? Small cap outperformance. A lot of banks are small caps, probably the highest weighted industry group. Makes sense to see these really nice reversal patterns from the bank ETFs. This is the big banks, the regional banks, and the really little banks, community banks. And guess what? From a risk appetite perspective, things couldn't look better just within this little space or within the banking subsector. Why? Because community banks, the riskiest ones, have been doing the best. Again, how much have we talked about that over the past few weeks and months? The riskiest stocks, the most offensive stocks within each group are demanding the most attention, right? They're outperforming bull market stuff. Here they are on a relative basis now, right? Financials are looking great. I could show you a base in XLF that looks a lot like this EWC, Canada. But within financials, it's the banks leading, right? Taking back a key level here. This is community banks versus XLF and the Spider KBE bank index versus XLF. Hitting new highs, completing reversal patterns, what we'd expect to see. What else should be working in a small over large kind of a world? Small cap industrials have been the leader within small caps. Easily the first back to new highs before small cap tech. In fact, small cap tech still isn't there. Let me check the chart. Small cap tech still, I don't know, almost 10% away. Small cap industrials, boy, it's making new highs when XLI, large cap industrials, were making new highs. Last month, early this month. Point remains. But what else, right? Small caps are working. How about this base in ARC? A lot of small and mid caps in ARC. Bases look the same. I think a world where small caps are completing this base and moving higher makes sense to see ARC completing this base and moving higher. Again, it goes back to the whole risk on theme. Small caps, relatively riskier assets. Speculative growth stocks, obviously relatively riskier assets. They're both catching flows these days. These are the groups we're focusing on. Leads us nicely right into our favorite, Coinbase. Listen, it's tough managing winners sometimes. Coinbase, it seems like this thing just goes up every day, higher and higher and higher. It has now at this point, just off of the late October lows, we are up, I don't know, 130%. If you're looking to feed the ducks, and I'm planning to, on the first red candle, first sign that the current momentum is cooling, actually planning to take a little bit of profits in Coinbase because we got long Coinbase back in January in the 40s, right here on this failed breakdown and hook higher, long since I think 49. It's just become too big of a weight in my portfolio. I'm going to take some out of Coinbase, sprinkle it into some other crypto assets. That'll be my strategy there. I will still own a very large position in Coinbase. It just won't be irresponsibly larger than everything else like it is right now. That's my plan. But again, With something like this, where it's just dripping higher every day, wait for a little bit of weakness, right? You don't want to go running out of it. So 168 today. As long as we're above 160, I think that's a nice level. I still would like a little bit more digestion or consolidation. I don't want these things to move in a straight line higher, at least not for too long at a time, because that's never sustainable. And longer term, if you're really in this for the full cycle, I think long term, you want those old all-time highs, 370 in Coinbase. There's probably still a lot here. Just, I hope it gets there in an orderly fashion and not some sort of parabolic move. But we will see. One that I think looks like a much better entry right now is Marathon. Mara, call it 19, 20 at the breakout level at those year-to-date highs and August highs from last year. So clean. I think this is what that comment in the chat was alluding to. Super clean chart. The risk reward, call it 4-1. I'm sorry. We're looking for 4x, right? So long against 20, target of 80. So 60 points of upside, maybe from current levels. What are we trading at right now? 24, maybe 4 points of downside if you're going to stop yourself at 20, right? So 60, or you got a 15x risk reward ratio. Again, the closer that you buy that to 19 or 20, the more favorable or attractive that risk reward ratio becomes, right? Because the profit potential should remain the same, the reward part of the equation, and then your risk could come down as you buy it closer and closer to where you're going to stop yourself out. I'm looking to get this one on weakness. I'm not in it now, but very interested. I think this is a great leap candidate. We were talking about it on our analyst meeting today. Again, the way this one's traded just over the past few days, I don't really love the idea of chasing it and entering here today. Chewy is another one that's kind of moved away from me this week. I think JC got in yesterday. He's excited about it. I use Chewy. I use Chewy all the time. I love Chewy. 22, 22.50. Little scoop and score. It looks great, right? So looking for a squeeze back above those prior cycle lows, really the old all-time lows. Nice short interest in this one. Looks like it's getting going. The most heavily shorted stocks are working tremendously past few weeks. So I think you can take shots on setups like this in this kind of an environment. In fact, I think you would be silly not to, because some of the biggest moves come from buying some of these beat up trends. So 22.50, first target 30. I don't know if you want to stay too long in this one. If you really want, you could run it back to this 50 level, but 22.50 to 30, that'll give you a nice trade. Speaking of short squeezes, maybe the squeeziest of them all, Carvana always at the top of our short interest scan. I don't know what the short interest right now is, but I know it's big. 58.50. Above there, this base is complete. Look at Carvana. I mean, this is just a textbook trend reversal. We were laughing about this one maybe going to zero last year. Boy, how things have changed. 58.50, long, first stop, 92.50. From there, maybe 148. We'll see. President and Chief Product Officer, inside activity in this one last year. Yeti Holdings. I love my Yeti. Great stuff. 51, kind of jumping the base here, right? Haven't quite reclaimed last summer's highs, but against those year-to-date highs, 51, I like it long, right? 50% upside to 74, measuring the base out here. Wellington Management, one of my favorite funds, 10% stake. Wintrust Financial Corporation, WTFC. Big insider purchase in this one, big Form 4 filing earlier in the year. This looks as good as any regional bank, right? This massive consolidation trying to reclaim these range highs around 100. Key psychological level. So I like this one on strength above 100 with a target of 147. I think it's time. Everybody needs some exposure to the banks. Money center banks, investment banks, regional banks, community banks, big banks, little banks, international banks, right? Seeing it with Brazilian banks, Swiss banks, German banks, Italian banks, crypto banks, all the banks. You need some bank exposure. These things look so good. I think from a sentiment perspective, remember, come a long way this year. Back in March and May, bank runs, right? Regional banking crisis. People were freaked out. That was just earlier this year. Talk about a sentiment washout. I think the banks, I think there's a tremendous long-term opportunity for the banks. I think financials could very well be the top performing sector 2024. Sleeper pick. Look out for financials. The banks are where the outperformance and leadership is over the short term. I think that turns into an intermediate and long-term trend, right? Because it would make sense. Banks are the most pro-cyclical or the most risk-on or offensive within financials. Continue to talk about how we see the most risk-on groups attract the most capital. I think it would only make sense for regional banks and community banks and even the big banks to take a long-term leadership role within financials. Merchants Bancorp, we've been long this one. I mean, this is what the leaders are doing in this sector right now. 33.50, we got long on this little consolidation breakout. Ran right into our first target at 41. Let this one breathe a little bit. Let it cool off. Let it digest. Big gains since October. Really big gains. Not stopping here today, up another 1.2%. I think this 40-80 level, this first Fibonacci extension, should be a nice little line in the sand for maybe us for us to define our risk for an entry with a price target of 52.75. CEO was a Form 4 buyer in November. Basically bought the breakout. November 3rd. Wow. November 3rd, this thing was coiling up really nicely. And since that purchase, I mean, he's already up like 33%. Month and a half. TBBK, the Bank Corp. This one's working on its way to our target. Not the best entry here, but I wanted to just show some of the leaders. Look at the massive base in this one, right? So weakness back to 30 or more likely strength above 48 in the Bank Corp. OFG Bank Corp. I think this is like Puerto Rican. This is an international one. Another monster base. So again, put this one on a special watch list. These are long-term patterns that require patience. But once they break out and start going, you just want to find a way to get involved. So similar to TBBK, either weakness back to 30 or strength above 48. Look at that, how the levels are the same. Isn't that something? Charts look very similar here. Huh. And last but not least, how can we forget materials? Materials have been some of the best stocks since the FOMC announcement last week, right? We had that big reaction. Stocks really picked up momentum after the Powell last week. Materials have been as good as anything. These metals and mining stocks look fantastic. Some bullish news this week. U.S. Steel looks like they are getting acquired by Nippon Steel, which is a Japanese steel company. Cliffs made a offer $35 a share just this summer Now Nippon is apparently going to get them for $55 a share. That's bull market stuff. But it's not just steel. There's a lot of stuff working. This is the Material Spider XLB. Looks kind of like financials. Probably going to take out this shelf of highs here and make a new all-time high soon. Here's steel. Love this one. Huge move off of the 2020 lows and then just straight sideways for a couple years. Now this range is resolving. I really like steel stocks. I think Nucor looks as good as any. Look at this monster base, one target hit off the 2020 lows, two targets hit, right? And it's just consolidating, keeps checking in with this 261.8% extension. I think it's taking it out right here today. Double check. Yeah, we're about 178.50. I mean, this one's going. So if we're above 178, we like it long with a target of 272. This one is super actionable right now. And I love this group. I think some sort of metals, particularly industrial metals exposure, makes a lot of sense, you know, in this tape. Based on everything else that's working, I think we want to be looking at the metals. All right, let's check the chat before we get out of here. Stage 2, materials, mid cap. Stage 1, large cap. I don't know. You know, I was a point guard, Adam, a long, long time ago. So I love that. Thank you. Good morning. It's afternoon. Ally, take it to Chart Request Live tomorrow, 1 o'clock. Nicholas. Yeah, Yeti looks great. You bought the bank crash. That's one way to do it. That's one way to do it. We don't really buy crashes, but we do buy bases, and you got some good ones there now. Raytheon, cool. Bring it to Chart Request Live tomorrow, guys. 1 o'clock. I don't think Patrick's on with me tomorrow, so it'll be Spencer or JC. But that is it for this week. Want to keep it short and sweet here. So, as you guys know, reach out, questions, comments, concerns, want to say hi, email us, info@allstarcharts.com. Be sure to join us next week, same time, same place, and join us every morning on Stock Market TV for the morning show. JC, myself, and Spencer, every day from 8:30 to 10. All right, guys, have a good one.